So the first theme I want to explore this morning is market growth rates in orthopedics, and we're really going to focus on adult reconstructive orthopedics, the largest portion of the business. The orthopedic implant business has a long history of steady procedural growth in the U.S. and reasonable, if less consistent, growth outside the U.S. Periodically, there would be a soft quarter here or there, or maybe even two in a row, but it would always bounce back, and sometimes after a soft quarter, you would have a huge quarter. It just grew and grew and grew, and it was very predictable and very reliable. Then, in the second quarter of 2010, it seems like the orthopedic growth engine seized up. And a new trend, I don't know if it's a trend or not, we'll get your perspective on that, of sustained low growth, or lower growth anyway, not necessarily low, but sometimes it's been low, but lower than historical growth rates, began and still seems to be continuing to this day. The first quarter of this year showed some signs of life. So I want to explore that a little bit. Bill Plovanic, I want to start with you. Is that a fairly accurate description of what's happened and what's going on?
It is.
Great. Hopefully not all the answers will be quite that concise. Bill, would you care to elaborate on that?
And I agree.
And where do you see it going from here? What's going on?
Yeah, no, it's definitely things slowed in the second quarter of 2010. I think we saw the knee market slow more than the hip market. In the first quarter of 2012, we did see a slight uptick in the knee market. You know, on Wall Street, we're looking at this, and the question is this due to easy comparables? Is this due to one extra selling day because we had 29 days in February this year? And so people are trying to get a handle on what's really going on. I think the way we looked at it is it's a nice tick up. It might be the beginning of a trend, but we also looked around the industry, and outside of total joints, we did see the sports medicine market pick up a little. So you see some discretionary spend coming back, and multiple players across the sports medicine market saw nice growth. So, you know, is that kind of pointing to that derivative, saying, are we starting to see growth come back in some of these discretionary procedures, which, you know, people would say knee is a little more discretionary than hip?
Bill, Kolter, do you see it the same way as Bill Plovanic?
Well, yeah, I mean, there is the potential factor that during the economic times that there, and with the advent of a greater proportion of patients having higher deductibles, that some patients may have put off some procedures. Having said that, you know, those procedures, if in fact they are related to end-stage osteoarthritis, ultimately need to be taken care of. And so we don't think that those patients are removed from the pool of potential candidates for surgery.
Okay. Brian, what about you? What's your perspective?
I agree basically. We are experiencing some pretty macroeconomic trends, which is impacting healthcare all around the world, not just in America. It's political. It's a question of how you regulate healthcare, whether you do it politically or economically. But in terms of the orthopedic industry, there's two aspects. There's the OEMs and the supply chain. And the OEMs obviously clearly are driven by procedure growth, end market. But the supply chain is largely driven by how they react to those factors, because the OEM strategy is effectively the market for the supply chain. So how they react to pricing in particular, inventory management, and the sort of general costs is very important to the supply chain. So procedure growth, you know, when we're looking at Symmetry, obviously it's important, but a large OEM deciding to outsource a certain branch of products had far more impact on the supply chain than 2% movement on sort of procedural growth.
Okay.
To kind of leverage off what Bill said, you know, unemployment obviously has started to stabilize, and you know, you ask what's going to happen in the future, and you know, with the increase of deductibles and co-pays, unemployment and the fear of unemployment, as that dissipates, you know, maybe we're seeing people come back and starting getting procedures.
Okay. So I just checked this morning, got on the internet and checked. There is no cure for arthritis yet. Everyone's still getting older. What's going on? Is it just economics? Bill Kolter, is this primarily an economic issue that's slowing down? People are making decisions to postpone, but these patients are eventually going to come back? Is orthopedic still a growth story?
Yeah, I think absolutely. Osteoarthritis has not been cured, and it can't be regulated out of existence either by healthcare policy. So disease prevalence is going to continue unabated. Those patients ultimately will need some sort of procedure to address their pain and lack of mobility. These procedures are tremendously cost effective over the long term. They're very effective in restoring function, and there is beginning to be a growing body of evidence that they can actually contribute to a reduction potentially in comorbid conditions, such as depression and heart failure, which is some information that we actually commissioned to be done and is pending publication right now. You know, in addition to that, there are those patients who are not yet candidates for end-stage disease, okay, and they're still enduring pain and lack of mobility and reduction in quality of life. So I think there's a lot of opportunity there for innovation, for new products that can address the disease earlier in its onset. And so yes, I think orthopedics is far from a mature market. It's an evolving market, but there are tremendous opportunities out there. As long as bone and joint disease remains the #1 source of disability, as it is right now, then the orthopedic market will continue to have opportunities to grow and improve the quality of life for patients around the world.
Yeah, and Bill Plovanic, let me explore that for a moment. So Bill Kolter has suggested, if I can maybe elaborate on where I think he's going, there's a category of patient that's not yet ready for a joint replacement, but they've got osteoarthritis. You know, maybe they're in their 50s, they've had a meniscectomy, and there's only so much an orthopedic surgeon can do for them right now. Maybe some injections, maybe some therapy. Is that an interesting space for development? Are there things going on there? What's your perspective on that?
Absolutely, it's an interesting space. I think AAOS put these numbers out a while ago, and we had looked at them and done some analysis. But you know, if you look at the knee market specifically, given the aging of the population and the obesity epidemic, I mean, the knee market growth should be somewhere in the double digits, and it's not. Yeah, you ask, is this earlier intervention space interesting? We are seeing some players. I think, you know, Mako Surgical has had tremendous success in expanding on the knee market, which Biomet actually founded with the Rapisi on the uni knees. But definitely we're seeing some interest in the space, and companies are trying to figure it out. I think the challenge historically, at least with uni knees, was just the ability to reproduce that surgery. In terms of other, you know, whether it's cartilage repair, whether it's you know, biological ways to go after it, definitely there's a lot of activity going on in development, but nothing out there.
Yeah. Okay. So I think just a final comment on growth. I think as an industry, we remembered something that perhaps we had forgotten, and that is joint replacement is elective surgery, and that people make economic decisions about that. And it seemed like we went for a decade where it just happened. And with the economy changing, a lot of uncertainty, people are making economic decisions. But that may create new opportunity, particularly for those people who are postponing. Okay.